Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss a very important topic that is regarding the DEA fund, that is the Depositors Education and Awareness Fund. So the Reserve Bank of India has recently released the FAQs regarding this fund scheme that we are going to discuss today, as well as let me tell you that we are also going to discuss the DICGC in depth. Okay, so today this is going to be very important from your understanding perspective, as well as you can see that this article was covered by the major newspapers, so this becomes very important, okay, from the exams point of view. So today we are going to have the complete understanding of this DICGC as well as the DA fund scheme of the Reserve Bank of India. And as you know that the schemes of the Reserve Bank of India are very important. Now just tell me that if I am clearly audible and visible. And good morning to all of you. Good morning Pratul, Shorish, Ankita, Nitya, Mrunal, Pramod, Aman, Shalini, Gomti, Ayush, Samriti, good morning to all of you. So just inform me that if I am clearly audible. Good morning everyone. So today's session is going to be very important from your understanding perspective, as well as you know that the Reserve Bank of India has continuously talked about the unclaimed deposits, unclaimed amounts. So you must understand that how important the scheme is of the Reserve Bank of India. Okay, so let's get started. But before that, do subscribe to the YouTube channel where you will keep on getting these relevant and important videos from your exam perspective, as well as join the Telegram channel where you will get the PDF of the session. So in the Telegram channel, you are going to get the PDF of the session. So we are starting with the Depositor Education and Awareness Fund scheme of 2014, that is the scheme of the Reserve Bank of India. So the DA fund scheme 2014, this was formulated by the Reserve Bank of India in exercise of its powers that has been conferred upon it under the section 26A of the Banking Regulation Act. Okay, and all the powers enabling it in this behalf under the provisions of this section, RBI has established the DEA fund. So as per the powers that has been conferred upon the Reserve Bank of India under the Banking Regulation Act, the Reserve Bank of India has established the DEA fund, and this scheme has come into effect from May 24, 2014. So this date, this year is very important. It was on this date that the scheme has came into effect. That is the Depositor Education and Awareness Fund scheme of 2014. This came into effect from May 24, 2014. Okay. So now the amounts. So here the amounts credited to the DA fund are the credit balances, are the balances of the depositors that are in the deposit account, or that are the money of the depositors with any bank, with the commercial banks, with the cooperative banks. Now, if these deposits, if the account has not been operated for 10 years or more, then this money will be sent to the Depositor Education and Awareness Fund of the Reserve Bank of India. So the amounts credited to the DA fund are the credit balances, are the balances of the depositors in any of the deposit account that is maintained with the bank. Okay, so which have not been operated. Now the account or the deposit has not been operated upon 10 years or more by the depositor, or any amount remaining unclaimed for 10 years or more. They will be included they will be sent to the Depositor Education and Awareness Fund of the Reserve Bank of India. So what are these balances? These balances of the depositors can be in the savings account, it can be in the fixed deposits, it can be in the recurring deposits, or it can be in the current accounts, or let's say any of the security deposit that the people have with the banks. So any of the balance of the depositor, of the customers, so that is the money of the customers. So that has to be returned to the customers, but the customers are not coming to claim their money. So after 10 years, upon 10 years or more, this money will be sent to the DA fund of the Reserve Bank of India. So the basic idea is that it is yours money. So the bank cannot keep it with itself, and the bank will say that, okay, now it is my money because the customer is not coming. No, the bank cannot do so. Okay, it is the customer's money. Let it be the security deposit, let it be the money that you have in the fixed deposit, term deposit, or the savings account. Any money that is of the depositor, even if the depositor is not claiming it on time, still it is the depositor's money. The bank cannot keep it with itself. So after 10 years, upon 10 years or after 10 years, it has to be sent to the DA fund of the Reserve Bank of India. As simple as that. So जितना भी आपका पैसा है जो आपने बैंक में रखा है, अगर आपने 10 साल तक उसे क्लेम नहीं किया तो डीए फंड में चले जाएगा. कोई भी पैसा सेविंग्स अकाउंट में, फिक्स्ड अकाउंट में हो, फिक्स्ड डिपॉजिट में हो, सिक्योरिटी डिपॉजिट में हो, कैसा भी पैसा अगर बैंक के पास आपका पड़ा है वो डीए फंड में चले जाएगा. ठीक है. नाउ the banks are required to transfer the credit balance in the accounts. So DA fund, what is the timeline to send the money in the DA fund? So timeline is mentioned here under the FAQs, that the deposits that are becoming due to be transferred to DA fund, that is they have been unclaimed for 10 years. They have been, the account has been inoperative for 10 years. So let's say in the month of April, the 10 years has completed. Okay, the 10 years has completed on April. So this money that the banks have, that on April, this has become unclaimed. This has become unclaimed in April. That is, unclaimed means that for 10 years, this was unclaimed. This was inoperative for 10 years. On April, this has 10 years have completed. So on May end, April, May. So in the subsequent month, in the next month, by the May end, the bank has to transfer the money to the DA fund. So that is the idea, that the deposits that are becoming due to be transferred to the DA fund, that means they have been unclaimed, they have been inoperative for 10 years by the depositors. So in the month of April, they have become they have completed their 10 years mark. So they shall be transferred to the DA fund on the last working day in the month of May. So by the May end, that is the last working day of the May, they have to be transferred to the DA fund. So that is the idea, that you need to remember that the banks are required to transfer. The banks are required to transfer their credit balance in the accounts mentioned above to the DA fund. So these accounts that have the unclaimed or inoperative accounts. So on the last working day of the month, it has been decided that they have completed 10 years. So on the subsequent month, the money has to be transferred to the DA fund on the last working day, okay, of the subsequent month. The banks are required to transfer the entire amount. It's not like that you have deposited your 5 lakh in the FD. Now you have forgotten that FD, or let's say the person has become deceased. There is some accident that has happened and the person whose account it was has become deceased. Now the son or the daughter of the person are not aware about this account. So this account has remained inoperative for 10 years and this has transferred. In April, this has completed the 10-year mark of remaining unclaimed, of remaining inoperative, and now on the last working day of May, it was transferred to the DA fund. It's not like that only the FD will go, no. As well as the interest rate that has been accrued in this 5 lakh for the years, for the 10 years, for more than that years. So whatever the interest rate was, let's say 2 lakh is the interest rate. So now 7 lakh will be transferred to the DA fund. That is, the banks are required to transfer the entire amount, including the accrued interest, as on the date of the transfer to the DA fund. So till the transfer of the DA fund, whatever interest has been accrued, that also has to be transferred to the DA fund. That is the idea, because if the bank is keeping the money for such a long period, the bank is also earning some interest by providing that money as loan. So some interest has to be provided to the depositor also, to the customer also. So that is the idea, that the entire amount, if there is the accrued interest on that amount, as it was in FD, as it was in the savings account or in the recurring deposit account. So if the money is having the interest, that interest has also to be transferred to the DA fund. Let's say on security deposit, there is no interest, because on the security deposits, or let's say on the margins or other kind of like the loan amount that is left with the bank, extra money that was given by the depositor by mistake. So on such, the interest has not to be paid. So only on the accounts where there is actually some accrued interest, of those accounts, the money, accrued interest has to be sent to the DA fund. So the banks are required to transfer the entire amount including the accrued interest as on the date of transfer to the DA fund. Okay, so that is the idea. Now customer or depositor. Okay. Yes, but bank should inform the deceased heirs about his deposits. If there is no nominee, like that's why it is said na that let's say you have made a FD but you have not put any of the nominee details. So how the bank is going to understand that like who is the heir or who is the nominee? Let's say some old people, old age people, they were living in, let's say, Chandigarh. Okay, and now the children are living in US, and the old person has not kept any of the nominees. So how the bank is going to go to the US or find the heirs? So it happens that many of the accounts remain or some of the accounts become inoperative or unclaimed. Okay, so customer or deposit can claim a refund of their unclaimed amounts from their banks. Okay, now what will happen that even if the transfer of the fund has happened, transfer of the money has happened in the DA fund, even if the money has been transferred to the DA fund, the customer or deposit can still claim a refund of their unclaimed amounts from their bank. So let's say after 10 years, let's say on the 12th year, the person is coming or the heir is coming, the person is coming to claim the amount, to claim the deposit to the bank. Okay, so they will go to the bank. Now based on the request of the claim, made by the customer or depositor or legal heir. So the customer or depositor himself is going, he suddenly remembers that okay, I had a FD and I want the money back. Okay, or the legal heirs. In case of the deceased depositors, the legal heir is going to claim the money now. The bank shall repay the customer or depositor along with interest. So it is the duty of the bank to repay the money with the interest. Now you will say that the bank has deposited the money with the DA fund. So how the bank is going to give the money? Okay, now the bank do not have the deposit, right? It has been sent to the DA fund. So what the bank has to do, that the bank has to lodge a claim for a refund from the DA fund that is maintained by the RBI for an equivalent amount paid to the customer or depositor. So if the person is coming, if the customer or depositor is coming with the documents, or if the legal heir are coming demanding their money after 12 years, after 13 years, after 14 years, they are claiming their amounts now. So the bank has to return the amount because it is the money of the depositor, it is the money of the people. So that has to be returned. Then the bank will claim the money from the DA fund. Okay, so that is the duty of the bank, to give the money when the depositors are coming and to claim the money from the DA fund later on. So that is the idea. There is no specific time limit. It's not like that you have not claimed your money for 5 years, for 10 years. So it will become the money of the government, it will become the money of the bank, or it will become the money of the RBI. No, it will remain your money. Okay, so there is no specific time limit prescribed in the scheme for claiming a refund from the DA fund by the customer or depositor. However, the customer or depositor or the legal heir are encouraged to claim such amounts as soon as they become aware of the unclaimed amount. So it has been said by the RBI that claim it as soon as possible. Okay, even if you claim it after 15 years, after 20 years, yes, it is your money that will be provided to you, but claim it as soon as you can. Okay, now what happens that let's say a bank has become liquidated. That means the bank is closing down. So now what will happen to these unclaimed deposits, to these accounts? Okay. So in the case of a bank under liquidation, now if the bank is liquidating, if the bank is closing down, then what will happen? So the depositor has to approach the liquidator of the bank for claim. So the bank, the customer will go to the liquidator of the bank. So let's say a bank is being liquidated by XYZ company that has got the liquidation role. Okay, so this XYZ company or this company, it is liquidating the bank because now the bank is closing down. The license of the bank has been cancelled by the Reserve Bank of India. Okay, so it happens with some of the cooperative banks, that the RBI let's say has cancelled the license or something. So the bank is closing down and the XYZ company has become the liquidator of the bank. So now the depositor has to approach the liquidator of the bank for claim of his unclaimed deposit, and the liquidator will settle the claim as per the following procedure that we will discuss. But there are two scenarios. In one scenario, your claims on the deposit are covered by the DICGC. And in the second case, your claim on the deposits is not covered by the DICGC. Okay, so there are two scenarios. In one scenario, you are safe, your claims are covered by the DICGC. In the second case, your claims are not covered by the DICGC. So we will understand these two scenarios. So first of all, if the deposit of a customer, if the claim of the customer or the depositor is of 4 lakh, you know that in the DICGC, in the Deposit Insurance and Credit Guarantee Corporation, Deposit Insurance and Credit Guarantee Corporation, this insures the amount till 5 lakh. So currently, the DICGC currently up to 5 lakh, including the accrued interest, this is insured by the DICGC. So your claim is of 4 lakh, so that means this is 4 lakh including the accrued interest, this is insured by the DICGC. So a customer or depositor had a deposit claim of rupees 4 lakh in a bank including the accrued interest. So the customer, depositor or legal heir submit a claim to the liquidator. Now liquidator will raise the equivalent claim with the DICGC. Liquidator raises an equivalent claim of rupees 4 lakh from the DA fund along with necessary supporting documents. DA fund will pay the amount equal to the insured deposit to the liquidator. So from the DA fund, the money will go to the liquidator. Okay, in this case 4 lakh, since DICGC has insured the money, the liquidator, after receiving the amount from the DA fund, will pay to the customer the 4 lakh rupees. Now so this is the simple case that, okay, your money was insured, and that's why even if the bank is liquidating, still you are getting your refund, you are getting your money. But what if your claim is of 6 lakh rupees? Now only till 5 lakh is covered by the DICGC. So if a customer, depositor, legal heir, they are claiming the 6 lakh rupees from the liquidator. So in this case, liquidator raises an equivalent claim because your money should be in the DA fund. Your money has been transferred by the bank in the DA fund. So from the DA fund, 6 lakh rupees will be claimed. Along with necessary supporting documents, the liquidator will raise an equivalent claim of rupees 6 lakh. The DA fund will pay only an amount equal to the insured deposit to the liquidator. That means the DA fund will only pay rupees 5 lakh to the liquidator. That liquidator will have to pay to the customer. Now what will happen to this 1 lakh rupees that is left? So if the liquidator finds that, okay, the liquidator has the capacity, the liquidator has the liquid assets from the bank. If the bank has left some liquid assets with the liquidator, then the liquidator will pay back this 1 lakh rupees. So for the remaining amount, that is 1 lakh, the liquidator shall make the payment to depositor subject to meeting all the applicable requirements. See, it is written very clearly that under the settlement of claims, it is the job of the liquidator, it is the job of the bank to repay every depositor the entitled amount for the depositor. It's not like that now the bank is closing down, so we can cheat with the customers. No, if the liquidator has the capacity, if the bank has the capacity, they have to repay the whole amount to the customer. Okay, so that is the idea, that for the remaining amount, that is 1 lakh rupees, if the liquidator shall make the payment to the depositor subject to meeting all the applicable requirements, and then the liquidator can claim the money from the DA fund by way of reimbursement. Okay, so from the reimbursement perspective, because the DA fund from your bank, the DA fund had received the 6 lakh rupees. So 5 lakh will be directly given to the liquidator to give to the customer. But the 1 lakh rupees, first the liquidator has to pay the customer the 1 lakh rupees. Then the liquidator can take the 1 lakh rupees from the DA fund in the form of reimbursement. Is there any confusion till now? No, yes, that is a very important point, and Samriddhi has asked a very important question, that does the DA fund also provide interest? No, the DA fund do not provide any interest. Okay. Any other question anyone has? Liquidator is a company that is liquidating the bank, that is trying to sell the assets of the bank, that is trying to close down the bank, wind up the bank after closing all of its liabilities. Okay. Any other confusion? Okay, so I can see there is no other query, so let me continue. So yes, now if we talk about the DICGC, DICGC is providing, so till now we have discussed about the DA fund. I hope this much is clear, that 5 lakh rupees directly can be claimed from the DA fund. Even if the bank is liquidating, the liquidator can claim the 5 lakh rupees on behalf of the customer, depositor or legal heir. But the 1 lakh rupees, the extra amount, 1 lakh, 2 lakh rupees, whatever the amount is, that is the extra amount. First, the liquidator has to make the payment, and then on the reimbursement basis, the liquidator can take the money from the DA fund. Okay. Now, coming to the claim on deposits not covered by DICGC. So till now we had discovered and we have talked about the claim on deposits covered by the DICGC. Now coming to claim on deposits not covered by DICGC. So in this case, there are some of the deposits that are not covered by DICGC. So what does DICGC insure? So the DICGC insures all deposits such as the savings, fixed deposits, recurring deposits, any kind of deposits that the people have with the bank, except the following types of deposits. So these are the deposits that are not insured by the DICGC. So deposits of the foreign governments, deposits of the central or state governments, interbank deposits. So these are some of the deposits that are not insured by the DICGC. So in respect of the deposits that are not insured by DICGC, that are not covered by DICGC at the time of transfer to the DA fund. So if the banks are transferring the money to the DA fund, so some of the deposits are not insured, that you can see. The payment to the liquidator by the DA fund shall be made only on reimbursement basis. So in this case, because the DICGC has not insured any of the money of these deposits, that means the liquidator first have to make the payment to the customer, and then the liquidator can claim the money from the DA fund. So usually what happens, that the liquidator directly take the money, at least till the 5 lakh rupees, the liquidator takes the money from the DA fund and then pays to the customer. The liquidator is claiming the money from the DA fund till 5 lakh rupees, and then the liquidator is paying to the customer. In the case of the left out amount, the liquidator has to first make the payment to the customer, and then on the reimbursement basis, the DA fund is providing the money to the liquidator. So in the case where these deposits are not insured by the DICGC, so first the liquidator has to provide the payment to the customer, and then on the reimbursement basis, the money will be provided to the liquidator from the DA fund. That is the whole idea. Okay, so if the banks continuously keep on having the unclaimed deposits, the bank will have to continuously give the interest rate also. Okay, so that the banks as well as banks will have to maintain, the cost of maintaining the inoperative account also becomes huge, because they have to maintain the data, they have to maintain the details and everything, they have to maintain the documents. So the banks do not want to keep on having more and more unclaimed deposits or more and more unclaimed accounts, because then maintaining those accounts is also a tedious task for the banks. Okay, and they will year on year they will have accumulate hundreds and thousands of accounts. So that will be a troublesome situation. That's why the banks send the money to the DA fund, so that they are not giving any interest on this amount, as well as they are also not keeping these accounts with themselves. So now, which banks? Now let's discuss a little about the DICGC. So which banks are insured by the DICGC? So remember that commercial banks, all commercial banks including the foreign branches, the branches of foreign banks, the local area banks, regional rural banks, they all are insured by the DICGC. Even the cooperative banks are also insured by the DICGC. But remember that the primary cooperative societies are not insured by the DICGC. DICGC is a wholly owned subsidiary of the Reserve Bank of India. So it insures all the commercial banks, all the cooperative banks, but not the primary cooperative societies. The DICGC insures all the deposits such as these, but not these deposits, that you have to remember. Okay. Next is, each depositor in a bank is insured up to a maximum of 5 lakh rupees for both principal and interest amount held by him in the same right, in the same capacity. That means that even if individual has opened, let's say, 5 accounts, one is a saving account, 2 are the fixed deposits, and 1 is the RD. So this will be accumulated. Same right, same capacity means a person having different accounts with a single bank, even if it is in different branches, it will be insured up to 5 lakh rupees only. So remember that if an individual opens one or more than one deposit account in one or more branches of a bank, when we are talking about a single bank, then he will be insured up to 5 lakh rupees only. But now let's say this same person has a joint account. So this will be separately insured. So a person having different accounts with a single bank, even if it is different branches, will be insured only once. If the person has a joint account with some other people, then that will be insured separately, because now this has become a different entity. So you can read this whole, but remember that same right means only once you have the right, and same capacity means it should be same person. Even if the person has joint account, that means the person has become a different entity because it is having a joint account with some other person. So this means that they are insured only once, the single entity. If they have the joint account with some other person, then that has become a separate entity. The deposits kept in different branches of a bank are aggregated for the purpose of insurance cover, and maximum amount is rupees 5 lakh is only. So even if you have the account in PNB but in different branches, in Chandigarh, in Uttarakhand, in Rajasthan, in Gujarat, you have different branches of PNB and you have deposited in different branches, still you will be insured only once for all those deposits that you have done in different branches. It is a single bank. Okay. Your funds from each bank. Now if you have made deposits in different banks, that will be insured separately. So if you are depositing in a single bank in different branches, that will be insured once only, not separately. But if you have made your deposits in different banks, that will be insured separately. PNB, SBI, ICICI Bank, SDFC Bank, Kotak Mahindra Bank. So those are the different banks. So they will be insured separately, regardless of the date of closure. Deposit insurance premium is borne entirely by the insured bank. You do not have to pay the deposit insurance. Like you are getting the health insurance, you are getting the life insurance. For that, you have to bear the premium. But for the deposit insurance that you are getting, that the depositors of a bank are getting, for the deposit insurance, the premium has to be paid by the bank, not the depositors, by the bank. The deposit insurance scheme is compulsory and no bank can withdraw from it. If the bank is not paying the premium for the 3 consecutive period, the registration of that bank may be cancelled. The registration of the insured bank may cancel. As well as now you will say that how the DICGC is paying for the failing bank. First of all, the DICGC is collecting the insurance premium from all the banks, as well as DICGC has the authority, the liquidator or the insured bank or the transferee bank. So the liquidator, we can say, that is liquidating the bank, or if the bank is amalgamated in some other bank, so the amount has to be repaid to the DICGC within such a time and in such a manner as may be prescribed. So whatever the DICGC has made the payments, okay, the DICGC has provided the depositors of a particular bank, let's say XYZ bank, has liquidated or it has amalgamated with some other bank. So this bank is closing down. this bank is closing down. So the depositors has to be paid by the DICGC. So the DICGC can claim the money, or the liquidator or the amalgamated bank has to repay the DICGC actually. Okay, so it is required to repay the amount to the DICGC within such a time and in such a manner as may be prescribed out of the amounts that has been realized by the liquidator by selling the assets. So for sure, let's say the DICGC has given 10,000 lakh rupees to the different depositors of a particular bank, XYZ bank. Now this XYZ bank, because it has liquidated, it has fallen down, it has become amalgamated in some other bank, and this bank couldn't repay the depositors, so the DICGC had to give this much of the amount to the depositors of this bank. So now when this bank is liquidating, when the assets of this bank is being sold, then from the money amount that has been realized from the assets, let's say 7,000 lakh rupees has been realized from the selling of the assets, so that has to be transferred to the DICGC. Okay, I hope this is clear. There is no minimum or maximum amount that can be sent to the DA. Okay, so now next is, okay, so this is the last slide. Focus on this, and someone is asking about the PDF, so you will get the PDF in the Telegram channel of EduTap. Okay, the link for the Telegram channel is in the description box below. If a bank goes into liquidation, the DICGC is liable to pay to the liquidator the claim amount of each depositor up to rupees 5 lakhs within 2 months from the date of receipt of claim list from the liquidator. So the liquidator, the depositors, they are coming to the bank to take their money. The bank do not have the money. The bank is under the liquidation process, and it is not easy to sell the assets. It takes 6 months, it takes 5 months, it takes 7 months to liquidate the bank. So till then, the liquidator will claim the money from the DICGC to pay to the depositors the insured amount. So remember that the DICGC is liable to pay to the liquidator the claim amount of each depositor up to rupees 5 lakhs within 2 months from the date of receipt of the claim list from the liquidator. So liquidator is sending the claim list of the depositors that these are the people, they are claiming their money. The liquidator has to disburse the claim amount to each insured depositor corresponding to their claim amount. Okay, so this is the idea that if a bank is reconstructed or amalgamated or merged with the other bank, the DICGC still has to pay the bank concerned the difference between the full amount of the deposit or the limit of the insurance, like whichever is the amount has to be paid, whichever is the insured amount by the DICGC. Now, in the event of bank's liquidation, the liquidator prepares depositor-wise claim list. So that is the task of the liquidator. Liquidator will prepare the depositor-wise claim list, that this depositor is claiming 4,50,000, this depositor is claiming 2,50,000, 2,80,000. And this has to be sent to the DICGC for scrutiny and payment. The DICGC pays the money to the liquidator, who is liable to pay the money to the depositor. In case of the amalgamation or merger of the banks, the amount due to each depositor is paid to the transferee bank. So in the previous session, we have understood the transferor and the transferee. So the transferee bank is the bank in which the transferor bank is merging, or this bank is amalgamated in this new bank. Okay, so in the Fincare bank is amalgamated in the XYZ bank. So the Fincare bank is the transferor that is transferring all of its liabilities, all of its assets to the transferee bank. Okay, so it's being amalgamated by the transferee bank. So the transferee bank is the one that the DICGC will pay the claim amount that the transferee bank will pay to the depositors. Later on, the DICGC will ask to sell the assets and to repay the DICGC. Okay. So that is the whole idea. Any confusion? So this is the first question. I hope you will be easily able to answer this question. So try to read the question and try to answer this question. So this is your homework question. I hope you are able to see this clearly. So this is the question. Okay. So you have to answer this question. And this is the second question. This is the second question. I hope you are able to see this clearly now. So this is the first question. I hope you will be able to answer this question. And this is the second question. So these are the homework questions for which you have to give the answer of the homework question in the comment section below. And thank you very much for joining the session. If you have any query, you can call us here or you can mail us here. Okay. So now any questions that you have? Yes. DICGC cannot directly provide the money to the customers. The DICGC is providing the money to the liquidator. Liquidator is connecting with the customer. DICGC is providing the money to the transferee bank. Okay, the transferee bank is giving the claims to the depositors. Ma'am, if amount is more than 5 lakh, bank has gone bankrupt, then who will pay remaining amount after DICGC has paid 5 lakh amount? So the amount will be paid through, like, the assets will be sold. First, the amount will be paid to the customers, then the amount will be paid to the DICGC and such. Sections. No, you do not have to remember the sections. Just have the idea of the sections that are very, very important. Okay. And that are coming in news again and again. So Aman, the basic idea is that first the DICGC is ensuring the 5 lakh rupees of the customers that will be paid to the customers. Then whatever the assets of the bank is being sold, from that assets also the customers will be paid. Okay. And then whatever amount is left, that will go to the DICGC, let's say. So this is it for today. I hope you have understood the whole news article and I tried to provide you the basic information. So this is it for today. I hope you enjoyed the section. Thank you.